want to welcome again all the people on a trial. Just to give you an idea of what goes on. When we get to a lot of Friday afternoons, we kind of have a training session, kind of a fill in a gap because a lot of times, to be honest with you, we ought not to be trading on Friday afternoons most of the time, especially in the summertime. And so we try to fill that with useful information. We also do it at other times during the week. I've done this presentation a couple of times, trading gaps. I've got one on my favorite patterns and whatever, and I'll be happy to continue to talk this afternoon. Probably you're sick and tired of hearing from me. Now, this gaps presentation, it's going to start off as if you're trading for day trading, and in fact, I'm a very short-term trader. You're going to find that Doug is more of a longer-term trend and position trader. Rick will be the more traditional trader, and I'll be swing trader to intraday trader. So we all kind of fit a different niche as far as time frames in there. But the trading gaps, even though I'm going to cover a bit on that, I'm also going to show you how gaps affect the daily patterns. I'm going to show how you can interpret what the gaps are and how to deal with them if you get caught in them. Usually that's on an earnings play and you should not be caught unawares, but how to deal with that software and take advantage of what's going on. So let me start the presentation. This is a little bit about me. An ex-USAF fighter pilot. I've got 2 degrees, computers and business. I've been actively trading since the late 90s. That's probably more like 1997 or 96, but full-time trader since 2009. I am here. I will look at some of the fundamentals. I talk about earnings releases and stuff like that. I'm not looking at what they're reporting. I'm not looking at what analysts are saying. But if I'm going to swing trade, I will look at fundamentals to make sure that I'm in basically a company that's not going to go out of business type of thing. I don't work for H&R candlesticks. I've been here since 2010, and I consider Rick not only a colleague but a friend. In fact, I consider almost every one of the people, the members here, as friends of mine. And I do provide private coaching. Okay, so and a part-time moderator, less than Doug, but I fill in the gaps when Rick is unavailable for other reasons. Well, disclaimer here, obviously, for educational purposes, and you need to do whatever it takes that you know that you're going to do well. You're going to use simulated trading first. You got to test out theories. And trading involves risk of loss of capital. Don't trade anything you can't afford to lose. With that said, let's move on. Why do trade gaps? I'm going to cover why do stocks gap, evaluating them for possible direction, some considerations there, some elements inside that trading plan or one that I have, and some examples. We'll go over those several examples of gap trades and then some recent ones. Gaps are often the beginning of a major move. Usually gap up or down can signal a reversal, and I'll show you some examples of those. And a gap down after an up move can also see the beginning of a reversal to the downside instead of the upside. These moves can be very profitable. I'll show you how to make sure you're in the ones that are going to work and increase the odds of being in those versus the ones that give success. And I'm going to cover both day trade and swing trades. Why do stocks gap? There's only one reason. News. News of some sort. Scheduled events, earnings, conferences, market reports, yada, yada, yada. Their stocks, they're going to move on those. I don't really care so much about the ones that are going with the market. I want ones that are on their own page. Unscheduled contract awards, analyst upgrades and downgrades and earnings guidance, and not all of these are equal. Some that affect earnings, they're the ones that are going to be the ones that I'm more interested in and how they react. And then after the event, the price will rise or fall to meet supply and demand. That's only kind of logical. The key question that we want to ask, the only question, is will the gap combined with the prior price action force investors to react on emotions rather than logic? It's really not about the report. It's how the stock reacts to the report. So the whole idea is that if we know that things are coming out, news is coming out, that's an easy one to plan for. And then we can get ourselves out in front of what's going on. Not necessarily trade ahead of it, but at least plan. Some considerations that I use, and I think you should consider as well. All up gaps are not good shorts. There are so many people that say, oh, I fade every gap. Well, there are reasons to fade a gap. Short a stock that gaps up, especially if it gets up to resistance. It's been in a super bull run for the last 12 to 14 days, and it gaps another 12% that day, and it's not on any real news, and it's potentially going to pull back. But all down gaps are not good longs. Not all gaps are filled, at least in the near term. And I'm not talking over the longer term. I do believe that the gaps are magnets. Once we get a gap in the opposite direction of the recent price really creates some sort of shock value of the people who were either short or long. So if I were shorting a stock and it was going down, 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 I'm happy, and then suddenly get earnings news and it gaps up and up substantially, I'm got the shock of, oh, I didn't expect that. And I'll show you some examples. We have to note where the stock is gapping to. Is it gapping up or down to a support or resistance area? What's the overall market doing? If the overall market is gapping up or gapping down, you have to say, is it gapping up more or less than the overall market? You also have to look at what the sectors are doing. Are they in favor by investors? You have to have done your homework and know what things are moving and which ones are not. And I like to know which have a high short interest, because those that have high short interest already, I'm probably not as shorting because it's a pretty crowded trade. But if I find some that has a high short interest and it gaps up and against the most recent trend, that's an impetus for adding fuel to the fire, potentially adding for additional buyers in a running stock. All right, I think you have to have multiple elements of gap trading plan, and these are just some of them. What to look for? Well, I already covered the setups here and the consideration about what to look for. Scanning. You can have a gap list if your broker has those. Software scan. Briefing.com does earnings dates, so you can come up with a list of earnings that are coming up tonight after the close or tomorrow before the bell and group those together. I do that. And that's where I post stocks every night and every morning for those stocks that are reporting and have decent enough volume, average daily volume. And watch out. You've got to know where the good entries and bad entries are, because there's lots of traps out there. We'll go over and cover those a little bit. I'll talk about trade management, how to exit out of things, money management, and risk management. We'll cover those in a sec. All right, we need to know what effect the gap will have. Well, I already covered a little bit about what do you think if, say, a hedge fund manager short the stock and suddenly going to go against it. What do you think the reaction of his boss is going to be? Especially if he's got 500,000 shares. He goes over and said, "You're killing me, dude. Get out of it." What he has to do is he has to call up his trading house and say, "I need you to cover." and they're going to have to go out there and buy it at whatever the price is going at the moment. So we need to be able to help them ease their pain. Okay, you've got a number of different type of gaps. You've got a bullish gap over an area of recent areas of consolidation. I like those. You have one that basically gaps over all prior swing highs after a long decline. Some people refer that to as a mortgage gap, as in back up the truck, mortgage the house, and let's put everything in it. I don't really call it that, but it's a high probability trade. Here's the gap up, the gap and crap, the up or down, and then the gap and snap where it snaps back up. Okay. But many times that when you see the gap and crap, it's up to a resistance level or it's down to the support level. All right, now let's get into some examples. I've covered the theory behind it. Let's just show you what happens. I will tell you the slides in here are valid, but they are old. So do not try to go back and find any of these in recent times. All right, so CRM, this was the end of the day before earnings on it. This is at the end of the day. Basically, the stock is kind of running up and did a little bit of a pullback and then a run up to about $100. The prior swing high was about 105. The prior swing low is about 95. If it stays in the middle here, we don't have any edge on trading. If it goes over 105, we can look for potential longs. Anything under 95, we could be looking at potential shorts. Above 105, it was clear air. There was nothing over there. Below 95, we had this resistance area around $90. So below 95, we could look at $5 run. Above 105, all bets are off as to where the potential top would be. This was a 120-minute chart, that 2-hour chart of the same end of day before earnings, showing you the resistance area and the support area. Here's what happened in the first 2 minutes of the day. You got these two candles. One was fairly tight, and it's $1 or so apart. You know, this is 102.50. Every one of these is $2.50. Oh yes, the slides are old, just like me. So on earnings, unlike regular swing trades, I make stocks prove to me that they have a higher probability of continuing to go up versus going down before going long and vice versa. In this case, I want to let it open up and let the euphoria get out of the way. Minimum of 2 minutes, would prefer 5 minutes. Many times if you have a gap that's going to be a runner, an earnings runner, 5 minutes is an eternity. So I use the 2 minute and I want to go long above the top of the 2 minute candle. It could be above the wick or over the body depending on how big the body is. In this case it was the wick. My entry was over 105. My stop was 104.50 without risking 50 cents. And I'm day trading. I'm not looking at this to be a swing trade in this particular instance. Why do I set the stop of 104.50? Well, 104.50 is about where the bottom of this candle is, the line here, the magenta line. Well, Steve, that could still be in an uptrend. Well, it could be, but I'm expecting this thing to get to 105 and to continue marching up at a 30 to 45 degree angle. If it subsequently gets above 105 and then reverses, gets down to 104.50 or lower, it's not doing what I expected it to do. Why should I stay in it? I can always get back in if it flips back around and goes back up. I just don't want to be in. It's just personal preference. Okay. This is the 5 minute chart late in the morning on day 20. This was the stop level, 104.50. And since it's a 5 minute candle, if you wanted to use a 5 minute, you can wait till 105.50 and enter instead of 105. To me, I wanted to get in earlier rather than later. It went up to almost 106, pulled back to below 105.50, and then it kept marching higher. It kept marching higher, and notice how the candle started shrinking here as we went 5, 10, 15, 20 minutes into the day. It's starting to lose the lump, 25, 30, and then 35. We had this spinning top after about 35 minutes. And I'll tell you that reversals times, about the first 30 minutes, you're going to get a surge buying or selling, and then it'll wane. Then it'll pull back, and it'll either pull all the way back and go down or go flat. And some that are going to run are going to continue to run from about that 30 to 45 minute level time frame. This is my 3 exponential moving average, my 8, and my 17. I use 3 exponential moving averages on every chart. Okay. Actually, this is an older chart. I was using the 8 and the 13 and not the 17. Right. So, and there was the 20 SMA. That was what I was using. I don't anymore. Anyway, I just use those for trend. I don't use them really for signals, but I use them to show the trend. But what I wanted to show you is that the stock came back and it basically sat right on top of this moving average. And we came up, doji off. Where would I take my first profits? I'd probably take it. I'm going to show you. The first half I took off at 107. Excuse me, you took it at 107? Well, yeah, it was up $2.50. Well, okay, you left a bunch on the table. That's true, but I'm using a trailing stop for the remainder. All right, and so the idea is not necessarily to get every last ounce of cheese out of this wrapper. My idea is to consistently get profits out of the middle and be high probability trades. That's where I'm going. Next one, this was Monsanto. End of day, 10-5, before earnings. I'm looking at this the day before. And I'm looking, I said, well, there's been several days. It was down pretty hard here. And then it went sideways for about 3 or 4 days. I also say there's a void above 52.50 or say $50. From in here, there's anytime I look at candles that are long, wide bodies, these long, tall bodies here, that means there wasn't, there was primarily, in this case being red, lots of sellers. They overwhelmed. Yes, there's probably little pockets of resistance in there, but for all intents and purposes on a daily basis, we can assume that this one has very little resistance. If you really want to know what's going in here, drill down to the 30 or the 60 minute chart. Right in here, I was expecting that there could be a move if I get over 50, so about 52 and a half, which is where these two overlapped, or even 55 and a bit, or $56. There was some move. That would be an expectation. Okay. Let's see. Monsanto, 1 minute chart. I wanted to show you the 1 minute because I was using a 2 minute, but I was using a 1 minute chart to watch to see where the 2 minute, there's the high in blue, and basically the low was the red. Well, wait a minute, this other one got down to 49 and a half. Yes, but I'm not going to use it as a stop. I'm going to use this 49.60 or so as my stop, because if it gets down to there, I'm going to be out. It's going to fail. If I'm looking for a breakout above $49.85, looking a stop below 49.62, I took share size about half my normal due to the pattern itself. This day right here, it doesn't have unlimited. It's going to get the 52.50 or above like that. I wanted to have less risk because the market was gapping down, and this is going against the market. So it's basically the salmon swimming upstream. So the idea was I'm taking 15 cents It's $400, 400 shares at 15 cents each is only $60. My plan at that time is to risk no more than $100 per trade. And my plan beforehand then was to sell 200 at 1 times my risk. So if I gained 15 cents or more, and then to move my stop up to break even and use a trailing stop thereafter. So the first stop was right here. As it got up to a little over $50 and something change, it came back. Again, remember we're on a 1-minute chart, and in the 1-minute chart it went up and it came back, and as soon as it started to get up to this 50-50, boom, I can raise my stop. I raise my stop under the prior. So once I'm in this candle, I've got this, and once I've got a candle formed, I can move my stop up. There are other techniques to do it. I can show you and talk to you about those, and all of them have their pros and cons. The idea is for me to get a nice quick pop, get it up, and then take some money off the table, and either if I wanted to get back in or do a swing, use that trailing stop there. All right, these are the results. I did get in 49.80, 4.5. I sold $250.13, which was 2 times risk. Well, why didn't you sell it at 1? Because it ran so fast. I basically didn't enter it. It came up to here and went back. So it got up there so fast that I would say, hey, I'll just take it. I moved my stop up to break even. I continued to move the trailing stop, as shown by the red one, candles, arrows that I've shown right here. And I sold the last 251.03 after a doji on the 1-minute chart. There is the doji. It got up to about 51.25, 51.30, and as it was coming back down, I said, you know what? It got back up here to 51.15 or so, and then it could not hold. So it got all the way back down to here to under 51 and got back up over it and then started moving lower. As this candle was forming, I said, I think this move is done most. So I took my money. I risked $60 and I made 284 bucks. That's after commissions. Not a bad risk reward percentage. Okay, Shield, SHLD, Sears Holding. This was the end of the day before. There was 32% short interest. Okay, we've got a couple of questions. How much was your trailing? Okay, let's double check. Well, 50 cents. And then I do the same thing here. Basically, I would, now one of the things is this was moving so fast and moved so furiously. I would have moved this one. I'll show you. Once this one gets up to here to the 106 level and comes back and then starts moving, gets back over 106, I can use this as my stop level. But once it runs and runs and runs and it gets to 107, do I still want my stop down at a little over 105? No. I'm going to move it up to about half that candle. And it goes up and it comes back down and then it starts back up again. I said as soon as that finishes, I can go up to the next lowest candle right in here. That's where I'm trying to set it. You notice that this one almost got me. And then it did the doji and it moved down. Now you have a decision to make. Do you let it pull back and go? Or do you just say, I'm going to take the money and run? This right here was a move up from 105.50 to right in here about 109 something. I took the money. I'd had enough, so why not? Could I have milked it for a little more? Sure. But could I have given it back? Sure. Okay. That's it. You wanted to know, can I explain short interest? Oh, no. Are they based on a dollar or percentage? They're not based on dollars. And trailing stops are not based upon percentage. My trailing stops are based on the technicals, the candlesticks, the price. John, short interest means that what percentage of shares are short, and that could be based upon how many shares are outstanding, which is called the float. And and or it could be in numbers of days of average trading to cover. And that's where you have this high short interest ratio. And I'll show you that on the chart. So if I don't add, if you want to, when I get to doing that, make sure I cover that on the chart. No, it's increasing. What it's telling trade. Michael, probably 10 on the short interest ratio, which is 10-day supply, but it's all a relative number, and I'll show you how to get that on finbiz.com. Make sure I cover it. All right, I think I covered adequately here how to roll the stop up. I just wanted to give you an idea about how much you do. There's the short interest. Let me go here. Roll. And this is probably just as good a time as any. I'm going to go to finbiz.com. Okay, you don't have to have a free registration. Log in if you want. Save some items. Let's look at Monsanto. Then you'll get a chart. It automatically draws you some support resistance lines, level lines and trends and the like. What's in here though that is really interesting for me, and why don't I actually go to one that's worthwhile, TIFF. Here's Tiffany. Tiffany was coming up. It reported earnings and it gapped up. Where did it gap up to? We're going to cover that in a minute. But it gapped up to basically this level right here, didn't it? And what does it have as far as short interest? Here is the stuff I'm interested in. The short is a percentage of the float, the rate that it shares it trades by the number that are short. But the percentage here is a more telling number, being 12%. Anything over 10, 12, 15% is pretty high. That's kind of what I'm looking for. Oh yeah, we're gonna cover that in just a minute there, Michael. Sorry, I wasn't trying to. Some people don't know where to get it. That's cool. Okay, so what I'm looking at is my resistance here on SHLD to be a little over 70, and some more resistance right here about 74.50, and then again some ultimate over here 77.5. It has high short interest. If this gets above levels, if you were short the stock, Michael, I'm going to ask you this question. If you're short the stock, where would you put your stop and say, you know what, I've got to cover at least part of it? Is it going to be above 70? Is it going to be above 72.5, 75, 77.50? You may have a little bit of all of these. But I can guarantee you that at some point, if you don't get excited about and nervous about the fact that it's going against your bosses, especially if you shorted it right here and then suddenly you're underwater a bunch. Okay. All right, this 2-minute chart at the open. Got a pretty wide candle here. I gave it a little bit over the top of that candle. Make sure you notice that it went up and then it pulled back. It went back up and it went above that level. And I had an entry above 70.70. Stop below 70.30, which is right here in red. Below that first candle. Only 40 cents. And then it tells me how many shares I can buy based on how much risk. And it got back up here to, it moves up. You can actually do another entry if it goes stabilizes here on this, again, 2-minute chart, 2, 4, 6, 8, 10, 12, 14 minutes. Notice how it consolidated right over here. If you didn't get in right here and get the big move, you can watch this one and you can get another, let's call it 25-cent stop over here if it breaks out. And what are we looking at? We're looking at it's currently at $72. $72 is in the middle here, but it's right about where this candle stopped. And my next target will be 74.50, 72.50 to 74.50. Will I take those? Sure. All right. So You had two possible entries, risking 100. Entry number one is over the top of this 2-minute candle. Entry number two would be over this. Yes, I do believe so, William. And in fact, I'm a proponent of 9:35, 10, 10:30, and I don't have. Uh, I think it's somewhere around 11:30. I'll have to pull the stuff up. It kind of evolves, but those first ones are really important. Then the afternoons would be things like 1400 or 2 o'clock, 2:15, 2:30, depending upon what the FOMC minutes come out, and 3 and 3:30. Because the 3:30 people who were short are trying to cover, people who were long are trying to go get out and take their profits. 9:35, why that? 9:35 is probably because you get that euphoria of people buying or selling, or the fear at the beginning, the first rush to the doors. Why 10 o'clock? It's 30 minutes in. We've got some economic reports there, so it does tend to reverse around there. 10:30, we have oil and nat gas reporting on Wednesday, Thursday. Markets tend to go along with those as well. Yeah, yeah, moving averages again, 3, 8, and 17 exponential, Jack. I'll cover that when we get on to the live charts. Okay, so the whole idea is I look at how much I'm risking based upon the chart. I don't do it on percentage terms. I don't do a flat amount in every one of them. I do it as I am willing to risk X number of dollars. In this case, 100 or multiples of 100. It tells me how many shares I can purchase. All right. So if I'm risking 50 cents and I only per trade, and I only want to risk $100, I can only get 200 shares. You got to have low commissions to do day trade stuff. You're welcome, Jack. All right, let's move on to another earnings play. Get to some day swing trades in just a little bit, so hang loose. This was kind of a bowl. I kind of did this, move up on earnings, then it did a pullback, and it went back up and it retested these highs right in here, and it pulled back. Does this kind of look like a cup and handle to you? Also note what happens over here. Over here on the left, that earnings, and it moved a lot. A lot of people said, that's a big percentage move. I can't get in. It did about the same percentage move the next day. What do we expect? It got overextended. And we pulled back, pulled back, pulled back, pulled back, pulled back, pulled back. And it consolidated. It took a long time to digest that big move. But guess what happens? This spike on volume is going to get retested at some point. And when it started to curl back up here, it's time to get on board to ride it up. All right, so this is before earnings. Anything over 8.5 or anything under either 7 to say $5.50, long or short. Okay, it gapped to a little over 9. Well above 950. Or sorry, yeah, 850. So I set, this is 2 minutes chart, 246. This gap had kind of a shooting star look to it, so it gave me a little bit of pause. Then the next 2 minutes, it got back up to 950, but it's looking to me that it cannot get over $9.50. So I held on. Then it wouldn't go below 9.25. It didn't get to 950. I said, you know what? If it gets over 950, I'm going to go long, and I'm going to set a stop below 9.25. And to risk 100, 25 cents, 400 shares. All right. My target, because I think it's going to run pretty fast, is 2 times the risk, $10. Then I'm going to use a trailing stop on the remainder or some sort of big spike move. That's my immediate plan as I'm 2, 4, 6 minutes into this. You have to think pretty fast on the fly on these. Well, I sold half at $9.98. Well, wait a minute, you said $10. Well, yes, but it got just there, and I saw a bunch of shares showing up at $10 for sale. I said, it may not get to 10. Am I going to be greedy enough that I'm not going to take money off the table? I've already got 48 cents in. I'll take it. So I sold half. I didn't make too hard. I made 1.8 times the amount that I risked. Then I can move my stop up to break even. My goal is to, as quickly as technically possible, move my stop up to break even. All right. What time frame charts to use? I don't use the 1 minute, William. I really use um, the 2 minute and 5 and 15. I don't use the 2 minute to trade because it's a little bit fast. I'm using tick charts and 3 minute chart futures mostly, but it depends on the stock and how much it moves. And there's a lot of things that depends, but I tend to use now a 3 minute chart and a 15 minute chart so I get the trend. And I'll go down to a 2 or a 1 just to get early in the morning as it's just opening to see what's going on. See if there are any pockets of resistance forming or any support. All right, so the whole idea was that I got up to almost $11 on the next group up here, and you know what? I took a quarter off, so I sold 100 shares. So I'm now out 300, 200 at the first, and 100. The market's going lower, and I want to let the remainder ride, and I want to attempt to use a pivot trailing stop. Pivot meaning, levels like these this little red line here. This right here is basically a pivot level because it's below this green and about level with this breakout level. Up, back. Here's your pivot, up, back. This is the swing level as it gets above there, up and back, and then somewhat below it. So I'm basically using trailing and marching it up. So the whole idea is for me to keep marching it up, and then I have to figure out where, with this one extending from now under $11, say 10.5 up to $12.5, how much am I going to let this go before it? Am I going to just let it pull all the way back? Am I going to leave my stop back here? Am I going to move it up? It's a judgment call. Well, on the futures, I use the 3 and the 15. On stocks, I use the 5 and 15. Just personal preference. I never scale in. I'll buy a new position. Let's go back to this right here could be a new position. But the reason I don't ask, yeah, we are, Hardy. The reason I don't do that is I've bought a full position here. Now, there is a theory that you could add to the position if you could reduce your risk. I've never seen that to be much at all possible. So therefore, I only look at the secondary entries if I missed it. So if I was looking at something else, I only found SHLD later in the day. Later in the day is maybe 5 or 6 minutes, more than 2. Then I'd have to look at this one. So there were 2 possible entries that are about the same amount of this. But I don't add to because I usually buy a full position to start with. Now, if I'd only bought a half a position, then I could do that because then I would still not be risking more than the $100 I was looking at. Okay. And we're moving up our break evens. Moving up our break even. Now it's a 5-minute chart. There's the pivot. There's the pivot. There's not quite a pivot, but it's a level that if it breaks down through this $10.5, and you'll see 25-cent increments, basically 0, 0, 0.25, 0.50, 0.75, and 0, 0. They tend to gravitate to those. And the larger stocks, the $60 and $100, they gravitates to the half numbers, 0.50 and 0, 0. So you tend to use that. You'll see people buying and selling a lot in here. So this I got up here, and there's my second sell. I'm out 300. Now it went up. It went all the way up to 12 and a half, and I'm trying to remember. I don't know that I've got. Right. I don't know I have a chart here that tells me where I got out, but it's not important. I bet I'm trying to let it do a pivot. I probably got out somewhere in here about 11 and a half as it got up to almost 12 and a half. It's all you have to decide when you're trading whether it's more painful for you to watch money that you used to have go away or sell, have money in the bank, and watch money you could have had. So we have to basically figure out what is more painful or less painful for you. Decide, go for that. Here's Taser before a gap up on the daily. I'll quickly go through there. Where does it gap to? Now see, this one's a tough one. This one cut. This one gapped up to just about 1750 to 1775. And it's not at the top at a resistance level. It's in the middle. What can it do? It could go all the way up to that level and then it stopped. Short interest is only 3.32 days. Well, it's not a lot. So what could happen here? This one could do a 45-degree runner, or it could pull back and try to fill the gap. We don't really have an edge here. So you can't get in on the day. If you're trying to swing trade this one, I'm going to let that doji, which is a sign of indecision, whichever way it opens and continues to go after about 5 to 15 minutes in the day, that's probably the direction it's going to go. So it may try to fake people out in the first 2 to 5 minutes, maybe even the first 15. But if it's going to go up from there or go down from there, it'll tell us. And sure enough, there was the doji. It went up. It got all the way up here to 19, looked like a breakout, got a whole bunch of people long, and it came down below the breakout level, got a bunch of people out, and it formed a hammer just at or below that level. If you did not get in on the earnings day and you didn't feel comfortable about it because it's coming in there, just wait. Keep it on a watch list. The vast majority of the breakouts are going to fail. They're at least going to come back and retest the breakout level. So wait until it comes back to that breakout level and then see what happens. That's what Doug's favorite is to do. And then you can here and write it. Here you're seeing my 3, my 8, and my 17 exponential moving averages. Yellow, blue, and magenta purple. And these right here I use as guidelines, my training wheels to say, this is how I visualize the trend. The trend is up. The trend is solid. Even though this is pulling back, it's solidly on the upside. And I can know when the trend is changing. Is crashing down through the 8. First thing that's going to happen, that 3 is moving down because price is moving down. Now, I'll cover my stochastics RSI. If we have time, I'll go over a whole presentation on that. But basically, it's telling me it's running out of steam. Berry, gap up, move through the resistance level of 27. Not really high short interest ratio, but guess what? Remember what I said, the signal of a big move coming? In here, once it gapped up again the second day, that's showing that the buyers are there. And it basically did a 30 to 45-degree run from 28 to 30 and a half. A lot of people would have said, I gapped here and it gapped again. I'm not doing that. I'm not getting in. It's too far extended. Well, how far did it run? And my stochastics, if you look down here, it's pegged. Stochastics artificially has a floor at 0, artificially, and a cap at 100. If it was unconstrained, it might be 175 to 200 up here. Basically, it can stay pegged at 0 or 100, probably longer than we can stay solvent if you're trying to short or go long. Here's Fran. High short interest, I got it on my charts. It gapped up to $8 to $13. And then that's the checkpoint. Watch what happens in the lower time frames. See what it does. 213s right here. The first target would probably be right here around $14. A dollar on a $13 stock, that's not so bad in percentage terms. Now, having to say 13 and a quarter and give it a 30-cent stop or whatever, because if it comes back down, it's probably going to fill a gap. I don't want to be in. So I'm not going to give it 1% or 2% or 50 cents below a 13. I'm going to get it maybe 10 or 15 cents below that $13 level and just say, if it's going to whip around, it may or not have me happening, but I am not going to write it back down to zero. It has high short interest. It should run. If it doesn't run, there's something wrong. Okay. Here we go. The idea was to go long over 13. Well, couldn't get it over 13, but it had 13 and a half. I set it at the top of the body instead of the top of the wick. Why? I didn't want to give it the extra, because if it hits the body, it's probably going to go all the way to the wick. If it gets the wick and then reverses, okay, I got in early. What if it gets the wick and goes up a little bit and then reverses down there? Where do I set the stop? I still got to set the stop down below 13 bucks. So am I going to have a 75-cent stop or 50-cent stop? And where's my target? My target's 14 to 14 and a half, somewhere in that range right there. So day trader, boom, boom, boom. The momentum has waned when it got to 14 and a quarter because the 3 EMA is flattening out. Exit. Day trader would exit on this 2-minute chart. Wow, you didn't get very many pennies in there. Well, yeah, but if you had a few shares, it adds up after a while. And Doug, notice what happened here. T-line runner. T-line being the 8 exponential moving average. Rick's invention. I used to use the 9. I've now moved to the 8 because I got tired of answering questions about why I used the 9 instead of the 8. Notice we had a big move here, and it went sideways for 1, 2, 3, 4 days, and then started to move. Why? A lot of people said, oh, let the 8 catch up. No, that's kind of what happened, but the reason it did it was that people were taking profits over here, and it was resting because it went up a significant amount from $11.75 to almost $15. So it had to digest that move, and suddenly it starts creeping up higher and higher and higher. It runs it. I don't know how long you would be able to watch it creep up there. It all depends on your personal trading plan and preference. Okay, I want to go over what was some recent examples, but they're not recent anymore. Walmart had a couple of resistance levels. You know, Walmart fade the rally. Right here, it gapped down. Gapped down, it came back up. So now these are the two 15-minute charts. Right here, there's the red one, there's the green rally, and it fails, it starts to pull back, then it holds. It holds basically the 69.50 level. Then it drops below it. If we get in there, once it comes back up here and starts to retest or attempt to retest the 69.50 and fails again, time to go short. Next day it gaps down. Notice this magenta or fuchsia line here, 17. I've noticed that the 15-minute and the 5-minute charts and the 60 and the 30, they all tend to come up to the 8 or the 17. The price will rally to that and then collapse again if it's down move. Or if it's in an up move, it'll pull back to those and then start an up move again. Stocks move up and down in waves. These will help us visualize whether it's doing a reversion to the mean to fail. Reversion to the mean to fail. Reversion to the mean, oh, it didn't fail. It came back here. This tells me I'm probably having a change in the trend on the 15-minute. So you could have gone short under there. If you didn't on that day, once it broke, say 68 something here, you could have gotten yourself 75 cents. Okay, just wanted to show you. Wayfair, opening range breakout. I'm not as much a big fan about opening ranges, but what happens here, opening range is nothing more in this case that the body here, this 15-minute open, it gets above that, or it gets below the body here. It did get below it and came back up to it, and it's running into resistance here. Huge short interest, huge gap up, $38 to $45. Would you believe that some people that were long are probably taking their profits? And as soon as the profits, the number of people who were willing to sell overcome, so the supply was overcome, it started to run. That's called an opening range breakout. Watch what happens to the stock price to the 8 and the 3 that collapses back on it. It's basically a T-line crunch. This is a 30-minute chart. Same time, same day, 12th. Big spike up, move up in a wave, pull back, move up into the close, start the next day. Who are these buyers? It had earnings the day before. There's some people don't see it until they get home and they get the news or they get the call from their stockbroker and they get in. Maybe less so. They read about it and then they get in, all the euphoria. And it goes up and it pulls back. How many days can that do that? I don't know. All right. I'm going to go to some live charts, but I want to tell you, bulls make money and bears make money. But pigs, I didn't say hogs, I said pigs get slaughtered. All right, let's go over to some live charts. All right, here's a daily of S.J. Smucker from earnings on the 23rd. This is what it was going into earnings. Where do we see? I see about 151 as support, about 156.5 or so as resistance. Short interest, it's average, so it's not going to help us up or down. It's been in an uptrend. We're probably thinking that people have been pretty bullish on this puppy. And then we're going to show you what happens here. Yikes. We get a big gap down to 148. Everybody above this line right now is underwater. At the time we opened, everyone for about the last 2 months that was in this stock is now underwater. Some of these people are probably having brown stuff cleaned out of their pants because they did not expect that. You go, huh? And especially since the last 4 days it was running up in earnings and the volume was increasing. I can guarantee you the thought process was there were retail traders out there were saying, oh, somebody knows something I don't. They're buying. I'm going to buy with them. There could have been some buying and selling, and they could be chumming the waters. Anybody a fisherman? You throw bread out into the water, and all the fish come, and then you put your hook down in there. I've even had my kids put empty hooks in the water and get fish. Oh, we'll get some in a minute there, Mr. Don W. Now, where's this going to go to? Well, hey, it gapped all the way down here. This is support. It stopped at 144. Oh, let's buy it at the close. Okay. How's that going to work for you? Well, if it was good at 144, it's probably even better at 140. Yeah. Oh, shoot. It's getting out. All right. What's happening here after 3 days? It's pretty much waning. My stochastic RSI's gone all the way to the bottom, and we're getting back to the last gap up level, the last earnings cycle. This is going to get at least a dead cat bounce. Oh, it didn't. It got down to the 100, got down to this level right here, and we may or may not be done. We're getting so close to this 200-day moving average, it's acting as a magnet. But what's really acting as a magnet is we're in the gap now. If we don't turn around, we're below this 139 level, and we're going to go to the 132 level, 32.5. Okay. Multiple shorters have a few calls. Yeah. It's reaction to earnings. It's all reaction to earnings, and what's probably happening is that people expected it to be good. They were surprised. They were shocked. And this right here is not mom and pop. Average daily volume is 1.2 million. The volume on that day was 5.4, almost 5 times normal volume. That could have been a lot of day traders, but it's probably some institutions saying, what did these guys do to us? We're out of here. Because they know ugly when they see it. You're welcome, BK. Okay, let's go over tour. I'm just going to stay on this one day. All right. Cup and handle. If it gets over 10, gets under, say, 9.25, or even 8.75. That would be what we're looking for. Boom. Let's look at, back one. Let me go to a 5-minute chart. Here's the gap down day. There's the first 5-minute candle. Then a doji the next time, and then a collapse down to here. So if intraday, you could trade that for a little bit, $2 or $3. That was what's going to happen. Tour. Now that's why I'm going to go over some of these on a 5-minute chart. This thing has very high, it's called a high wave doji for me, because it's really a perfect doji, but it's got, reason is that it's very low average daily volume. And this probably has really, and low price, it probably has a lot wide spread. You should probably not day trade any of that. Probably not day trade anything less than 1 million on average. And what it did is it kind of stabilized here and it rallied. Some people went long. What did it get up to? Got up to the 17 and collapsed. What did it collapse down to? The 885, 875 level. Trina Solar. Trina Solar, it gapped up. Oh, here's the high of the night, but it immediately sold off. Oh, but it rallied back up. Oh, then it sold off. Make it break out. Look at the daily and see how that's going, and see August 23rd. Let's go to the 5-minute. Yikes. What happened here? That's not a 5-minute chart, is it? I'm getting something screwy here. Okay. This is weird. This is not, oh, it's only moving at a penny, so forget it. Trina Solar shouldn't have been on. It was in the list. Shouldn't be. Toll Brothers. There's the gap up day. That right there is resistance, somewhere around that 29.75 to $30 level. Short interest isn't very high. Once it gets over that 30, there's no resistance. Look at the 5 minutes. Let's go over here. That 5-minute chart. Let's go back over here. Oh, it gapped up. You're talking about 75 cents or so. I'm not going to move a lot. Then $30 looks like resistance to me. Oh, it's like 29.50 support somewhere in there. It's either going to break down below 29.50 or about 30. Notice that the volume picked up. Volume picked up as we start to see more buyers as we got above 30. Is it going to continue or is it going to stop? It's battling and finally made it up to 30 and a quarter and finally made it to 30.75, then $31. If you want to look at a 15-minute chart, there's your 15, 3, 8, 17. Riding the T-line up, even though it went sideways here for about 45 minutes. Kept going up. You can trade the 5 or the 15, or you can trade the daily. I tend to use the lower time frames if I do day trades, and I'll help it refine my entry. Nordson, huge gap up. Kept up $4.50 or 5%. Yikes. When stocks get close to 100, they have a magnet to go to 100. 5 minutes. You're interested in going long? Look at the 5-minute chart. See what it's doing here. Basically, if you're looking to do a swing trade, I want it to get over there. That's a 5-minute chart. If I do a 15, use the 15-minute as your entry. Basically, I'm looking for anything over $98. If I use $98 as an entry, I could have got to 102, but then here's the kicker. It has high short interest. This right here is going to potentially do a 45-degree runner. I think the markets are not helping. The market's been so weak the last couple of days, it kept this from being a 45-degree runner. 45-degree runners happen a lot with gap up on earnings. Usually when it's against the prior trend, this one was up instead of down, but high short interest. I suspect that we'll look back and this will be 105 to 110. Okay. On this one, what is 18.2%? Days to fill that up. Are you, Judy, are you talking about on the prior slide, Toll SJM tour? Right, yes. All right, I'll hold it over. Latest short interest ratio. The short interest ratio is the number of days. Okay, hold on a second. And we're looking at, is that tour? Was that it? All right. It showed 18. Now it's been, it shows here the ratio is 12.63. Is that one saying 18? It's all a matter of data. They could have updated the data since the last few days. Anyway, it's 46%. We're talking almost 1 out of every 2 shares of this stock is short. That's huge. And if we ever get any surprise, it's going to run, but it didn't. But that right there was the short interest ratio, and it's a number of days. So the number of shares per day, average 335, divided by the number that are short. I don't see it here, the number, but it's got to be 5 million. So 5 million divided by 335, call it 500,000. That's what it is. It's about 20 days. Okay. So this one does a calculation for me, and I see this number, and I see it in the 15 numbers and stuff. That's pretty high. How do I get on the chart? Wow. If I told you, I'd have to shoot you. Nope. It's a, okay. Right click, edit toolbar, and you can add it. You hit the plus. It adds another field. I've got it. And then you just type in, you have to have latest short interest ratios. You have to know LATES, and then it shows up. Latest short interest ratio. You add it in, and I gave it, changed the font. I put the white background on it so it jumps out at me. Yeah, the secret sauce. Barbecue sauce. Okay. That's pretty much the presentation, I believe. Let's go back. Nope, that's the end of the presentation. You have any questions, folks there? I prefer a rub instead of a sauce. Okay. I won't go there, Ed. We have mixed company today. I'm going to quickly go over these 20 slides that I've got here on how I use StochRSI, because I think it's important. I think it might give an edge to some people. I do more day trading now than I do swing trading, but I do have some regular holdings and stuff for longer term. Stochastics RSI, what is it? How's it computed? Why I like it? Then the reason I brought this up, is there some share sizing in here, how to get the correct amount. I would strongly suggest that TV 2020 is the way you want to go with that. Instead, it will also help you. This is exactly the same way, but it's TV 2020 is far, far more capable than what I'm going to show you. What is it? It's an oscillator, basically, of an oscillator. It fluctuates between 1 and 0, and this is how you compute it if you really want to know. I don't really have to care. The computer does it for me. It's like an RSI on steroids. Simple. I use this secondary indicator. My primary indicators are price and candles. When I combine those, and it's increased probability of success, especially when I have the secondary indicator. Caution, it's very volatile depending upon the settings. It takes time to understand how to use it properly, and it should only be used to confirm price and candlesticks, and if you trade off it alone, you will lose money. Okay, when this thing was going down, 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 and MNST, Monster Beverage, which is no longer called Monster Beverage, I think, as we're coming down, 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 boom, it hits the bottom. It stays on the bottom for a few days, and then we get a gap up on earnings. This is curling up from the bottom. I get a candlestick pattern, doji gap up on earnings, so I've got a doji gap up. That's number one positive. I've got earnings positive against the grain. That's two positives. Then I get the curl up from the bottom on my RSI. That's three. It can't get a whole lot better than that. It's used to judge momentum. It did the doji gap up, boom, 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 boom. And this is what this is. It says, okay, going up, 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 and volume's going down. Stochastics is pegged. It's still going up. All this is telling me is that it's maximized. It's maxed out because it's artificially capped at 100. I don't know what the real number is, but I know that when it curls back down, the momentum is basically over. Waiting for that. Okay. Put your mouse in a blank spot up on the toolbar area. Right click. Get a pop-up, edit toolbar. Edit the toolbar. Click on add field, the plus button. Then you can put it, I put it on the top line, and then type the word LA late est, LAT. Short interest ratio. Click on that and it'll show up. Okay? I'm not going to add another one. Show that. Let's go back to the presentation again. Candlesticks in the crossing. Dunkin' Donuts. Pulling back. Stochastics down. Peg, peg, peg. We get a doji and then a gap up in either direction. It's broken the downtrend. Why? Well, my 8 exponential moving average and my 3 are both curling up through 17. But this is basically, I'm visualizing a trend. I do not need to draw a trend line. My brain is educated to basically see this trend has been broken. And it's curling back up. So I see candlesticks by, trend line break, stochastics RSI, decent volume. Ding, ding, ding. I am given permission to go long. KKD. Break out the RSI's pegged. Oh, it's time to go short. You can't go long. So you can go long forever. Consolidation pattern. What happens in consolidation? It's basically resting. It climbed this, it used up all its energy to climb the mountain. And then it got to the top. It rested. Rest, 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 rest. Okay, I'm ready to go again. And that's what happened. Basically, this had no sellers. The way this sideward consolidation says, this is extremely bullish because there are no hugging highs, high level consolidation. All right, here is a double bottom RSI cross up. Well, then a J hook. Well, there's the double bottoms right here. This one's at a midpoint. They did a cross. I don't really care so much about the cross, but what happened is it got oversold. It bounced back up, goes back down to the double, and there's the double. Not, well, stochastic momentum tells me it probably is, because it didn't pull all the way back to zero again. It only pulled back to the half level. That gives me a high confidence that this one's probably going to break out and work. So use your standard. If you buy down here with a stop down here, fine. If you wait for the breakout, if that's your way you trade it, fine. I can see both of those. If you didn't see any of those, you got back over to here, you saw the cup, you saw the handle. This is the J hook in the making. This being the far left-hand side. Let me mark it up. That right there being the first part. This one being the pullback. This one being the bottom part of the J, the J hook. Okay, so right in here, we're looking for this mark start moving up, and stochastics in the oversold. Okay. Here you go. Stochastics can aid in intraday entry or not, or keep you out of things. Right in here, it pulled back, moved up, pulled back as this gives it. This one pulls back just a little bit and then starts to break out. What's happening to stochastics RSI? It hadn't come back all the way yet. That has lower odds. It's not confirming. It varies from, okay, my settings in TC2000 are 773 under stochastics. So if I edit this, I use 773 simple. I've tried exponential. This simple works a little better. And the percent D is 3. 30 simple. It tends to work for me on all time frames. And it's an approximation anyway. You're welcome. Thanks, Ed. You're a scholar and a gentleman. I don't care what they say about you. Hey, stochastics RSI works on a daily. It works on the intraday charts, and it works on a weekly chart too. Man. On the higher time frames, it gets smoother turns. It takes a little longer to come down and a lot longer to play out. But you would expect that with a higher time frame. And I've said this already. RSA pegged at the bottom is no guarantee it's going to go back up. People who try to use these curl ups as their only confirmation are going to lose money. Divergence, price is going up, RSI is not confirming because it's going down, down, down. Volume is kind of decreasing there. Might give you a little heads up. What do we take first? Price. But you'd be cautious. If you're long this and you see this, it could just be resting and it could be a very bullish sign. The odds are that at some point you might fail. Just like Doug had his higher odds for a pullback. These are my higher odds that I used for a possible pullback as well. And we got the midpoint. And we got the double top. Whoops, sorry. This double top here, stochastic could only get up to halfway level. Could not break out. Okay. How many shares to buy? You know what I tell you? You could come up with your own spreadsheet calculator or a lookup table or whatever. Or you could do you could do the TV 2020, because TV 2020 does more than just share sizing. It makes you follow a very rigid process and one that is methodical, well thought out. I'd buy it. It's one of the cheapest pieces of software that's going to make you money. It will keep you from losing money. Trust me. But the whole idea is the thought process. It's exactly what's going on under the hood with his. You're telling it how much you wanted to risk by putting in the entry and the stop. and you told it how much you wanted to risk, and then it tells you how many shares you can buy. Simple as that. Okay, any other questions, folks? Yeah, we talk a lot about him behind his back too, and some of it's good. Okay, folks, let's do Mr. Mark. We're back a little bit. We're just bouncing all over the place. Just bouncing all over the place. And okay, I'm going to switch. We can stop the recording. Let's see, gaps that fade instead of running, worth looking, stalk and buy when it turns around. You have an example question, like tour, right in here? That's what you're talking about? I'll come back to you, William. Sorry. Make sure I answered all your questions if I haven't. Well, let's see one that might have. Are you talking about this? I need a chart to talk to Terry, or a little more words. Excuse me. If you're talking about you're talking about the gap, or you're talking about the run after the gap. You're talking intraday, or you talking about daily? What time frame? I'll give you some time to answer those for me. Okay, intraday. Gotcha. I'm just gonna go straight to a 5-minute chart. This might actually be a good example. So I'm going to pull this over to the left so we can't see it. I'm now doing a replay in TC2000. I've moved it to an intraday time frame. I've slid it back over to the left, so I'm hiding everything to the right, and I'm using the left and right brackets to the right of the P on my keypad and moving one candle at a time, one time frame. And this is where I can mentally go back and trade it mentally. Say, okay, we're told it did this high wave doji. I'm not going to wait till it gets over 30 and a quarter before I go long. And so I'm probably going to go somewhere above this body, and the short would be below that body if I was going to go short. But this one's $30, so I'm probably going to round it to above $30, maybe 30 and a nickel, something like that. Okay, let's see what happens after the first 5 minutes. Ooh, it went up, but didn't take us in because it didn't go over my 30 and a nickel. And I guess I could think about shorting it below this level here. I didn't look at it because I really had no interest in trying to fade the gap for where we look at 40 cents, 35 cents. No, I wasn't thinking about that. And a lot of people they see that they don't run and they come and do one of these things, they pull back and they just blow it off and never come back in the rest of the day. And I've been guilty of that. That's the reason I know that people do it, because I did it. I got to keep rotating back through them. It's stabilizing. Oh, comes back up here, retesting the $30 high level. It got up and it would have triggered me in at 30.05 if I still had that in and interest. It went back down to 29.75, depending on where the stop was. We could have been bumped out. So did that kind of answer your question? Why here was back there? You have to decide. Yeah. So we have to decide whether this thing's going to have a higher probability going up or going down. The factor is, what's the volume looking like? What is short interest looking like? What does the daily chart look like? What the market's looking like? Yes, all of those take into account. With Toll Brothers, remember we were crossing $30 right there. And the reason we had trouble with $30 is that was where our price resistance was. Edit. And I do everything in round numbers. That right there looks like resistance. If we can get up over that 30, we're probably going to run, even though we don't have high short interest. So looking from the daily, you know what's going on out there. We're above the 200, and it's reaction to the news. 5 minutes. Okay. $30, 30.70, 30.75, 31. You could do a day trade here. You could actually have used that as your way to get in. At some point in time here, if I'm swing trading, I use the 5 to get in. I'm going to flip over to the 15 to help me decide whether to get in, to stay in or not. Maybe, maybe not. If it goes and does a gap fade and actually goes all the way down and retraces too much, I wouldn't go back long, personally. So right in here, this one, the 15-minute, it's going up, it's going up, it's going up. You got to decide right here. Do I take some off the table or not? Or take all of it off the table? If I'm a day trader, I take it all off. Probably took the first off here at 31, move my stop up, and I'm probably out somewhere around 31 and a half to $32, somewhere in that area. If I bought 1,000 or even 400 shares, I could sell 300 shares and keep 100 and use it for a potential runner. Yeah. Okay. And people fade the gap. That's not a gapper. Let's try to find. Oh yeah. Okay. Well, actually, let's stay on Toll Brothers for a moment. Let's go to today. Toll Brothers today. Okay. Toll Brothers didn't gap up. Oh, crap. Sorry. Didn't gap up. Trying to find one that gapped up down that works. Deck T. Okay. 08-4. Ah, okay. On the 24th. 5 minutes. All right. Royal Bank of Canada. Gap up on earnings. You with me, Dave? Gapped up. Over 64 would be a long. Anything under there, it looks like it's going to come back and fill the gap. Okay. Okay, back now. This only trades 870,000 shares. It's probably a little thin. It doesn't have huge short interest because of the fact that it's a bank. These wicks are telling me it's probably very spready. So I'm probably not going to day trade it because it's just a little bit way too much that I got to give. But in theory, this came back and it kind of filled the gap. It basically did a reversion to the mean. It's now doing a normal run, basically running right up. If you think it's going to run, you have to pick out, do I go long over this level and cover over here? Because the fact that it's whippy and spready, probably not a good candidate to be putting the stop too tight. Now, it's probably also not going to run a lot because it only runs 73 cents a day on average, but on earnings it'll do more. This one you could go long. Oh, whoa, what happened there? That probably scared the bejesus out of somebody because when it opened up way up here, and at one point, I'll show you what that candle looked like. At one point, That's what the candle looked like. That'd be scary, wouldn't it? It's easy for us to go back after the candle is done and say, oh, I would have stayed in. Try to do it live. Probably not going to happen, especially when that happens. A lot of times when these things do the gap fills, most of the time they really don't continue. They need to go up and only retrace one half or less of the gap up. So in this case, I'm going to use the cheat sheet here. I'm going to use quadrant lines because basically it's Fibonacci's. Okay. Well, quadrants aren't Fibonacci, Steve. Yeah, I know, but I'm lazy because I can estimate halfway between these two. That's 25%. That's 50. 30.382 is about 33% or so, about halfway between. Give me a break. Halfway between 50 and 75 is about 66, about that level. Things ideally would retrace no more than, say, 25 to 33%. Ideally, the strongest. The next strongest, 50 to 66%. And anything over 66 to 75 is probably not going to work. And it did. It did almost 75% retracement. It did almost. Okay, sign it. Oh, Doug's posting stocks for Monday or now. And see how it failed? Not good. Okay, ADMP. Let's go to the daily. We're going to get a daily today. Okay, 5 minute. Okay, I think, Thomas, you're really talking about what Doug was, right? It was earlier. Gap up. All right, here we go. Quadrant lines. Here's my quadrants. Let's see what happens. And it's retesting the $3. It's a 50% level. Still holding the 50% level. It's trying to consolidate that gap up, and then it moves. Yep. Notice that it did the strongest of the strong, and heck, I got lucky that you gave me an example that did not prove me a liar. Terry, you can, I'll give you your $5 later. Did a breakout, but a failed breakout. And it looks like, now this is with the weak market, and it looks like we had, this is a surge, and it consolidated, it surged again, and it started moving. Because you're looking at a very inexpensive stock that trades a lot of shares, probably got a lot of day traders in here. Yeah, checks in the mail, and I won't say the rest of it. This will probably move quite a bit. Now, I don't really like to trade stocks under 20 bucks. Why? Because you get the day traders and the stocks at $3 to $10 because it allows them to buy with a high volume. I'd rather make, now, I'd rather make 50 to 75 cents out of 100. It used to be $50 stock. When I played Trader United Technologies, it was a $50 stock, and we use this as an example. This thing, because it's so large and trades a lot of shares, It may have a nickel spread or whatever, but it's a Dow component. It follows the Dow quite a bit. It follows the rules. We have big guys in there. The little guys are not. I used to follow this guy. I used to work for the company, but I used to follow it, and I would trade with on the same side as the market maker. I could see what he was doing because I traded it every day. I day traded it, and I just be patient. And I think you remember today I said that we got to 11:30, 11:45 before we got our breaking down. It did it as well. Possibly. And you can get filled here. These tend to move with the indices, which is good and bad. They can get days that they move on their own. But Rick likes to do percentages, and I understand that. The last time I checked at the bank, they did not want me to pay in percentages. They wanted me to pay in real dollars. So that's the theory behind that. It's easier for me to make 50 to 75 cents consistently off of this per share. Means you have to have a fairly sizable account or some market. I do understand that. I appreciate that. And the reason you probably can't do that with options is as soon as it starts to break down here, the market makers just slam in a whole bunch of premium. And if you're right on direction, you're going to get killed anyway. You're not going to make any money because as it starts to bounce back up, as it sucks out all the premium, and you were right, it moved down 50 cents and you made nothing. Absolutely nothing. That's why I don't day trade options. I'll trend trade them. I can do a trend trade on 15-minute chart. I can trend trade on a 30-minute chart. Heck, I can swing trade the 60-minute charts. This one is a solid downtrend. It came back up here and gapped up with the markets the other day and immediately failed. This was a potentially a short. Instead of using the diamonds or whatever, you could possibly use United Technologies as a surrogate to go short. Depends, but Doug's absolutely right. The spreads are on the options going to be wider. XLU. Well, yeah. Well, it is now. Markets are selling off. XLU was a short below about 51 to 51.50. In fact, I have been pointing out stuff like WEC for a few days, and I didn't really get on top of this. This is the one I can remember, but I started seeing REITs and utilities getting weak. We've got a rotation going out of maybe the industrials. They're pretty flat. This kind of looks like the Dow. Expect that. But see, it's weaker. It's stronger than the Dow. Only 30. Let's look at SPX. It's even stronger than the SPX. Mid cap. Kind of looks like the IWM. Of course, transport's kind of ugly. But we're not grossly bad. Tell you, there's a rotation going on. Look at a weekly chart. Roll over. My area chart. Up, 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 rolled over. This right here. I love my area chart. You got the tabs across the top. This gives me the big picture. All I have to do, if I'm looking at something like this and I want to see the forest, it tells me all I need to know in a heartbeat. Oh, I have strong opinions on everything. Sorry, William. Well,